Imagine this. It's 2010. Two guys both have $10,000 to invest. Guy one, let's call him Derek, spends every weekend reading stock reports, watching CNBC, picking the next big thing. He buys 10 different stocks. Feels like a genius. Guy number two, let's call him Mike, spends exactly 15 minutes, buys one boring index fund, goes back to watching Netflix, never thinks about it again. Fast forward to 2024. Derek made some wins, lost some big, net result up about 60%. Mike up 350%. Did nothing. Beat almost every professional fund manager on Wall Street. That's what we're talking about today. And by the end of this video, you're going to understand exactly why Mike won and why you should do the same thing. Here's the thing most people don't tell you about investing. Picking individual stocks is hard. Not just hard, nearly impossible, even for professionals. Let me give you a real number that will shock you. Over the last 20 years, 92% of professional fund managers, people with Harvard MBAs, people who do this full time, failed to beat the stock market average. 92%. So if the smartest people on Wall Street can't beat the market consistently, what chance do you and I have picking individual stocks? Almost zero. And yet, every day, millions of people in the US, UK, and Australia open Robinhood or Trading 212 and start picking random stocks like they know something Warren Buffett doesn't. There's a better way. A boring, simple, almost embarrassingly easy better way. It's called an index fund. Okay, let me explain this simply. Imagine the entire US stock market is a giant pizza. 500 slices. Each slice is a different company. Apple, Google, Amazon, Microsoft, all the big ones, and hundreds more. Now, you could try to pick the best slice. Maybe you pick the right one, maybe you pick a bad one. Big risk. Or you could just buy the whole pizza. All 500 slices at once. That's an index fund. Specifically, something called the S&P 500. It tracks the 500 biggest companies in America. When you buy an S&P 500 index fund, you own a tiny piece of all of them. Apple goes up, you win. Google goes up, you win. Amazon goes up, you win. One company crashes, doesn't matter, because 499 others are still running. This is called diversification, and it's the closest thing to a cheat code in investing. Let me show you some real numbers. Sarah is a teacher in Melbourne, Australia. In 2014, she started putting $200 a month into a simple S&P 500 index fund. She didn't touch it, didn't panic when COVID crashed the market, didn't sell when everyone was screaming the world was ending in 2020. She just kept going. By 2024, her $200 a month turned into over $52,000. She contributed around $24,000 total. The market did the rest. Now, compare that to her friend James in London. James was always chasing hot stocks. GameStop, crypto, Tesla puts, always the next big thing. By 2024, James had put in $3,000 and had $31,000. 10 years, all that stress, all that research, for $1,000 profit. Sarah did it on autopilot and nearly doubled her money. This is not a fairy tale. This is compound interest. This is index funds. This is boring wealth building that actually works. Okay, so how do you actually buy an index fund? 3 simple steps. Step 1, open the right account. If you're in the USA, open a Roth IRA or use your 401k. Platforms, Fidelity, Vanguard, Schwab, all free to open. If you're in the UK, open a Stocks and Shares ISA. Platforms, Vanguard UK, Hargreaves Lansdowne. If you're in Australia, use your superannuation account or open a brokerage. Platforms, Vanguard Australia, Stake. Step 2, choose your index fund. For beginners, keep it simple. VOO, Vanguard S&P 500 ETF. VTI, Total US Stock Market. VWRA, Global Index for UK and US investors. That's it. You don't need 10 funds. You don't need to be fancy. One solid index fund is enough. Step 3, set up automatic investing. This is the most important step. Don't try to time the market. Don't wait for the perfect moment. Set up automatic monthly investment, even $50, even $100, and forget it. Let compound interest do what it does best. Make you quietly, slowly, undeniably wealthy. Look, I want to be real with you. Index funds are not exciting. They won't make you rich overnight. You won't have a crazy story to tell at a party. But here's what they will do. They will slowly, consistently, reliably build your wealth. While you sleep, while you work, while you live your life. Warren Buffett, the greatest investor of all time, has said publicly, when I die, put 90% of my money into an S&P 500 index fund. If that's good enough for Buffett, it's good enough for us. Start today. Start small. Start boring. And let time do the heavy lifting. If this video made investing feel less scary, hit that subscribe button right now. Because every week I break down money concepts like this. Simple, clear, no fluff. So you can stop being confused about money and start actually building wealth. I'll see you in the next one.